Boom, the Dow up 175 points. My name's D7 here at Grok Trade, kicking off the week here Monday, May 16th, 2016. And the markets go bullish. Wow, all major indices in bullish territory, with small caps up 1.4%, or I'm sorry, 1.3%, banks up 1.4%. Financials, though, only up 0.5%. US dollar break even. Crude oil rallies 3.43%. Gold, silver, fairly flat. 4% drop in fear today. Here we are looking at the SPDR, which is the ETF, Exchange Traded Fund, which is much like a mutual fund on the major index, the S&P 500. Be sure to take the 101 courses. They're free. You can take those at free online tradingeducation.com or go to groktrade.com and take those free courses. That'll get you started in trading. Check this out. Now, you'll notice that I made a number of new trend lines. Because of today's action, I had to go from the... I started fresh. Went to the drawing board, erased everything, and reestablished lines. So, pause the video. Feel free to duplicate the lines that I've written or have drawn in. Been doing this 18 years, so it might behoove you to do so. You'll notice that gave a big warning yesterday, or in the weekend edition video, because we had a head and shoulder neckline that was pierced. Let me draw that neckline. So first, so you see it, shoulder, head, shoulder, the neckline from here to here, and I'm going to extend it out, was broken over the weekend. On Friday that happened. However, on Monday today, boom, to the upside, making this null and void. I am erasing that. Can no longer say a big head and shoulders trend reversal because of today's rally. Today's rally was on fairly weak volume for a Monday, so I'm not overly impressed by that, but we did rally higher, touched the falling 20-day moving average, and retraced from there. We are now in what's called a big bull pennant. We have this rally to the upside, rally to the upside, rally to the upside, and then a coiling taking place of price action, with all moving averages for the most part coiling together, tightening up within this price action. You have the 200, 100 day down here flatlining below. And I did put a green arrow here. But I should have a green arrow with a huge question mark. Not convinced that we're going to keep going higher here. I think the reason we have low volume and that today we get a pop after such a horrible breakdown on Friday, that I think the Feds are doing their part in propping up this market at crucial areas. And we see that yet again. Now on Wednesday, the Fed, they'll be coming out at 2 p.m. Eastern Standard Time to give us their minutes. All of us are watching that to see what they'll be doing on interest rates. Furthermore, tomorrow the CPI comes out, and that'll be pre-market. I want to show you a couple more charts here. If I go to the diamonds, we go higher and higher and higher and higher, and we go into what's called a bull flag. The bull flag formation is within the confines of this triangle. Can't call it a symmetrical triangle, can't even call it an ascending triangle. It's just a weird triangle shape going upward. I could almost argue rising wedge, but wow, it's just an odd two trend lines that we have here. I'm not 100% sold that this lower trend line is in fact a trend line that we should have drawn. Nonetheless, we do have a bull flag, and if it does pop here, if it does do that, I see this bull flag breaking to the upside, but it has a big trend line to deal with. Actually, it has two trend lines, a minor and another larger trend line here. The NASDAQ is in a symmetrical triangle does give us a bull flag. And this bull flag is at a 38.2% Fibonacci retracement area. And we do have a break of this trend line to the upside right there. Boom, to the upside. But volume just has not been grand. We do have resistance coming up, but I could definitely see this thing rallying to up here to this upper trend line. Small caps, big uptrend, pinching together. It's a rising wedge, bearish divergence. And then we go into this mini-me bull flag, which is a kind of a bull pennant that's pinching together, giving us a falling wedge, which is all of these are bullish. We do pop, but we stay below this minor trend line, and we're looking for a breakout to the upside. If that happens, look for this to rally up, stall around these horizontal red lines, and hopefully go higher. We'll see. That's something we're looking at. Crude oil, I said look to sell. Every time we get to this line, we dropped. We were there over the weekend, but today I have to erase that because we popped over that and did so on decent volume. So I'm going to put a green arrow here now that we popped up. That's very, very good to see that pop up. We have the 200-day moving average coming down. That can certainly act as resistance. Gold had this huge gap to the upside, and I called buy here over the weekend. Huge gap, pops up, but it sold off. So this worries me here. It'd be interesting to see if it wants to break down below this major trend line. This is something to be watching for, guys. Silver, nice bull flag dropping, called it a buy. I'm still calling silver a buy. As long as it can stay above this 1607 area, it's important to me that it stays above that. And quickly, and as you will recall in the weekend edition video, I pulled up the weekly chart, and 5 minutes or so into my video over the weekend, I said, wow, this is looking a little bullish to me on the weekly chart. Pulls back, staying up here near resistance. So far on Monday, the beginning of the week, we do pop. It has big resistance to contend with. But this is looking more bullish to me than bearish on the weekly chart. So keep that in mind. And always, go to groktrade.com. Click on Trading Mentor, and let's make you a formidable opponent in the markets. And we'll help you do so through the best of trading education, so you are a master at technical analysis. If you like it, like it.